Twitter just posting their earnings, crossing the tape, adjusted earnings at 25 cents per share. It's coming in 4 cents below estimates. However, revenue did come in above forecasts, as did some key metrics. I want to show you what's going on here. One of them, monetizable daily active users, that came in at 152 million. It's higher than the consensus estimate of 147.5. It's also up 21% from a year ago and the fastest ever growth rate for that measure. Twitter says it expects between 825 million and 885 million in revenue for the current quarter. The consensus estimate is 872.6 million. So it's a little bit in the middle there. We're going to talk about Twitter's quarter with the company's chief financial officer, Ned Siegel. That interview is coming up at 8:45 a.m. Eastern time. But for some reaction right now, given that we have the numbers crossing, we got Ed Lee here, New York Times corporate media reporter, also a CNBC contributor. John Fort is in the house, co-anchor of Squawk Alley and All Things Tech. What is your immediate take on this? The stock looks like it's moving on this news, about 3% up just now.
Well, I want to get in there and see the daily active user numbers as well, expected to be up 2 to 3 million overall, pretty flat in the U.S. But I think this is a little bit of a sigh of relief given what we saw from Snap, concerns about the holiday season overall. Snap and Twitter tend to be associated together more than anything. And then if you look across digital media in general, Facebook's quarter disappointed some people. Google, they broke out the numbers, but top line wise, not as strong as some had hoped, though the core ad business was the stronger part. So I think there were some worries about Twitter. That's why perhaps the pop, at least initially.
Yeah, but I do think, with this move to the monetizable daily active user count, they keep moving the goalposts on us. I mean, that part
which is in itself a little weird. If you don't like the metrics, we'll make up a new metric.
Well, there was MAUs, then DAUs, then, hey, hold on a second, we want to look at the monetizable.
Yeah, remember the eyeballs metric in this very building 20 years ago? It only got 6 million eyeballs, no profit.
Oh, remember the non-logged in users when Twitter tried to...
Non-gap is the
that was a big part of it.
I want to note a couple of things. The stock's actually gone up from up 3%. It's now moving down about 1.5% off. A couple of things I imagine investors are going to look at. U.S. revenue totaling $591 million is an increase of 17%. So in the U.S., it's a 17% increase. However, international revenue totaled $416 million. That's only an increase year over year of 3%.
And I think most of their users are outside the U.S.
So I think you're going to start to look. I'm trying to sort of understand where maybe some of the questions that are going to start to get asked about what these earnings really mean.
I think where we the mixed result. The top line beat is actually nice, right? Because that's really where you want to see companies like Twitter go. I think Facebook, the disappointment was it's not growing at the rate that we're used to seeing from them. So Twitter getting back to that top line growth is nice. The fact that they missed on the bottom, they're figuring things out, right? That seems to be as much a part of the Twitter narrative.
They call rebuilding their core ad server, if you remember what had happened earlier.